Well, hello everyone, and welcome to XPON's inaugural H1 FY22 Interim Financial Results, which follow a period of strong continued performance for the company. For those of you who might be new to the XPON story, the company listed in December 2021 and is a marketing technology and cloud business providing mission-critical services and software solutions to enterprises in Australia, New Zealand, the United Kingdom and Europe. XPON helps customers to better leverage their first-party data by deploying the XPON marketing and CX technology stack, unlocking exponential growth. So through today's session, CEO and founder, Matt Foreman, will walk you through the results presentation. We'll then open up the floor for about 10 to 15 minutes of question time. If you have any questions, please type them in the tab at the bottom of your screen. I do have one side note for today, which is that CFO Leanne Wolski is an apology due to a family matter, and she certainly sends her apologies along. But with that, I'd now like to hand over to Matt, who will get us started. Thank you, Matt.
Morning, everybody, and thank you, Jane. Yes, very excited to share our inaugural results this morning. So let's get into it. So just for those of you that are new to the XPON story, I thought I might just take a couple of minutes here at the start just to sort of talk through some of these thematics that are really helping drive the exponential growth that we're seeing. The first one of those is this concern around data privacy globally. And, we all know as consumers how important our personal information is and how much more awareness that we're having around how information is being used online, and certainly that's being matched by the regulators we're seeing all around the world. Secondly is this issue, which is linked very closely to the first around the phasing out of third-party cookies. Third-party cookies are the technologies that internet companies use to track what you do online. Probably no secret that Facebook's recent results were impacted very heavily by this issue of phasing out of third-party cookies and device tracking by Apple. And I think the stat from Facebook is responsible for $10 billion in revenue reduction. So it is a very big strategic problem for these global vendors. It's also a problem for our customers, which are advertisers, because it really impacts the effectiveness of their targeting of their ads on the internet. XPON provides a solution to this, both for our customers and to these global internet companies like Google and Facebook or Meta. And that's really about using first-party data in a very privacy complicit and anonymized way. And our Wondaris customer data platform is a key piece of intellectual property and technology that we use to help facilitate this for our customers, and also through our vendor partnerships with Google and Facebook. And I guess thirdly, this trend around the shift to the cloud, and you're seeing that on two sides, companies really rapidly adopting the cloud and the consumers really demanding these really personalized experience that's facilitated by these new cloud technologies. So they're the sort of drivers that's been responsible for really helping sort of provide the tailwinds behind XPON's growth. So today I'd like to sort of talk through some summary of our first half results for this financial year, a bit of an overview of the company and our update, and then some financial results and an outlook at the end. So very pleasing to see we've had very strong growth in the first half of this year. Our annualized recurring revenue, we exited December at 13.1 million. That's up 148% from December in the previous year. So we've seen some really strong growth in our annualized recurring revenue, or ARR. Our revenue that we reported for the half was 6.2 million. That's up 213% on a stat basis compared to last year. 141% of that growth was organic growth. So the underlying business within XPON is growing very quickly as well. You'll see our gross profit of 3.9 million. So that's 284%. So it's a considerably higher increase in our gross profit than our revenue. And that's really been driven by this expansion in our gross margin, which was 64%. And that's up 12 percentage points on the previous period as well. So we've been able to complete an acquisition, which is a company called Internetrics, which we settled on the 5th of June. We've been able to expand that margin from that acquisition through the integration of that business into XPON. And as more of our revenue comes from higher margin sources, like our usage fees and our software licensing, it's really helping drive that margin expansion for us. And it's a key focus area of the business. And our executive team is very focused and incentivized around that continued margin expansion. As we highlighted, we completed the IPO in December. So we have 12.8 million cash in the bank. So we're very well capitalized and able to invest in the projects and programs that we need to continue to drive our growth. And the contribution to revenue from recurring revenue sources was 91% during the period as well. So what I'd sort of like to talk through here very quickly is a pro forma look. So what this is looking at is our revenue, our gross profit, and our gross margin. This is assuming that the Internetrics business that we acquired in June was part of XPON going back those 5 half periods. And also the acquisitions that we did in the UK going back to April 2020 were included for the full period as well. So you can see there's been really strong growth in all of those metrics. XPON very much is a fast growth revenue story supported by strong margin expansion there. And, you can see that margin from 41% going back to the start of the period, continuing to expand half on half through to 64% for this half as well. Our annualized recurring revenue, probably just something to highlight here. This is a cumulative view of our ARR, annualized recurring revenue. So for the period that we've just exited, we exited, as I mentioned, at 13.1 million, and that was 148% year-on-year growth from December last period. That also included some contribution to ARR from Internetrics in the first half there, and that was 1.6 million in that first half. Our unit economics. So we're growing very quickly. We're expanding our margin, and we have very strong underlying customer profitability that's underpinning the growth. We've got very strong customer retention rate. Our average monthly retention rate is 99.6%. So not only are we retaining customers, but we continue to grow and expand them. You can see that from our revenue retention rate, which is 131%. Now that's up 12 percentage points from 30th of June last year. So the team's done a sensational job at continuing to not just retain the customers that we have, but incrementally deploying new components of our XPON stack to help really expand and drive that revenue retention. A customer lifetime value, 776,000. That's up 28% from June 30. So as those customers are expanding, their average value per customer increases. That's a gross profit margin view of our lifetime value as well. So you get a very transparent look at what a customer is worth to XPON. The cost per acquisition to acquire the customers during the period was 35,000. Now that is up 52% on June. That's expected. We do expect that to continue to increase as we're investing very heavily in organic growth and investing in our sales and marketing capacity to drive new customer acquisition. That's provided us with a 22 times LTV to CAC ratio and a 7-month CAC payback period, which is up on 1 month from the June 30 number that we reported previously. So we still feel like we've got plenty of headroom to continue to invest in our customer acquisition costs. For us, this is about landing customers and then expanding them, and it is a land grab. So we would expect that CAC number to go up and also that CAC payback period to go up in the short to medium term. As we continue to grow the business. And then our total customer lifetime value is 153 million. That's a simple formula of the lifetime value per customer multiplied by the number of customers. That's up 39% on the corresponding period as well. So just as a quick introduction again to anyone that might be new to the XPON story, the business is sort of structured with 2 very scalable complementary offerings. And supported by our corporate XPON Technologies group. So the XPON Technologies business unit is really responsible for helping to land customers and deploy the marketing and customer experience stack that we have. And our XPON Platforms business unit is responsible for the development and the commercialization of our two proprietary technology platforms, which is Wondaris, which is our customer data platform, and I'll touch on that shortly, and also Holoscribe, which is our extended reality platform, or in the current buzzwords, it's a metaverse solution, and we'll talk on that shortly as well, and sort of talk about the impact that all this additional interest around the metaverse is having on that Holoscribe product. The team's achieved some fantastic stuff. In addition to listing on the ASX, there's probably two key highlights I just want to call out here. Firstly, between June 30 and the end of December, our opportunity pipeline has increased 31%. So we really are seeing the impact of the additional investment we're having in our sales and marketing, and that's flowing through into our pipeline, 31% increase, half on half there. And the other thing probably worth highlighting here as well is our Wondaris customer data platform was successfully reviewed and audited for ISO 27001. So that's a global security standard for software technologies. And the accreditation was received shortly after the end of the half in February this year as well. So really reinforces to our customers that the technology, the security and the privacy standards that we have within our platform technology is of a world standard. From a talent perspective, there's three sort of core pillars that we're investing in across our talent. First one of those is the group function from the XPON Technologies group to really support and provide that scale platform. The second area is the tech enablement to really ensure that our people have a seamless experience with us. And we're actually, as an organisation, capturing the data that we need to optimise the talent part of our business. And thirdly, our people programs, which is really about retaining the great talent that we have and really ensuring that they're aligned to the XPON vision and they can do the best work possible. The footprint of the team has seen some fantastic growth over the half. This sort of gives you a bit of an overview of where our talent is spread all around the world globally. Probably a key highlight there is the Hanoi part of our business. We have a really highly talented team up there as an engineering hub. As you can see, we've got 35 engineers up there at the moment. We see that as a very key strategic asset to the business in this war on talent as well. We're finding that we're able to attract talent quite quickly in Hanoi. We're developing a very strong people value proposition there as well. And it's much less competitive than some other markets like Australia and the UK, for example, particularly for engineering and technical talent. So we see that as a strategic pillar to continue to help us scale our growth into the future. We've got a fantastic leadership team. In the interest of time, I won't talk through this, but feel free, please, to go and check any of us out on LinkedIn and connect. And just in October of last year, we completed a team engagement survey. We had a 77% response rate. I think what's important about this is it really does highlight that we've got this very strong cohesion amongst our team around the XPON vision. We've been able to integrate that Internetrics team very well, and those combined teams are collaborating well, and they're very aligned around values and purpose that we're focused on achieving here at XPON. And the team really does believe that the leaders know what they're doing and they're very supportive. So, we feel like the alignment of our team is very strong, and it helps us build a great culture to continue to attract really talented people and also to retain them and enable them to do the best work of their lives. As far as the size of the market that we're addressing, on the right-hand side here is a sort of a graphical representation of what the XPON marketing and CX stack is. The way I like to explain this, it's like a heap of little pieces of Lego blocks, and you connect them together to create an ecosystem. And that ecosystem really helps our customers extract the right value from their initiatives in this space. It's a very large market. We're focused currently just on Australia and the EU, and that currently is forecasted to be a $201 billion addressable market across those different components of the stack. Probably the other thing to call out here, as well as not in addition to our own proprietary technology of Wondaris and Holoscribe, we have some fantastic partnerships with some of the global vendors, specifically Google Cloud and Google Marketing Platform. We resell some of Google's technology for components of that stack. So in the cloud infrastructure component, we work closely and resell Google Cloud. And in the ad tech component there, we work closely and resell Google Marketing Platform. And that's a great source of leads for the business. About 30% of our leads in Australia have historically come from referrals from Google Cloud or Google Marketing Platform. It's also a great source of expansion as we work closely with those teams to help create value and expand value for our joint customers. So just quickly touching on the Wondaris customer data platform. So there's three things that the Wondaris platform does. Firstly, it helps centralize our customers' disparate data sources or siloed data that they have on their customers and consumers. That can come from a range of different systems and platforms within an organization. Typically, we see there's 6 to 8 primary sources of customer data and marketing data inside a business, but organizations can have up to 200 siloed data sources. So it's a big problem for organizations to be able to bring all that data together, get it centralized in the cloud. Now, Wondaris platform allows us to connect to data in any of the clouds, so GCP or AWS or Azure or Snowflake or any other platform. Centralize that in a central place, enrich that data. So we do a process called identity resolution, which helps create a single view of the customer. And once that single view of the customer is created, then the machine learning and the artificial intelligence inside of Wondaris can do what it does best, which is predictive analytics. So the platform's able to predict behaviors or actions that a certain cohort of customers might take, and then very seamlessly through very simple workflows, create automated synchronization with those predictions into the global marketing and advertising technology platforms. So what that means is our customers can then create audiences that they can target their communications or advertising to based on predicted behavior from their own customer data that they've centralized in Wondaris. And that really does help solve some of these problems with the issues around third-party cookies going away. And it also really delivers on a solution for the Facebooks and the Googles of the world that are losing access to data to help with advertising targeting. Our Holoscribe platform, it's a very visual and rich, immersive platform. I think the best way to talk about what Holoscribe is to give you an example. There's a screenshot there of an immersive experience that we've recently worked with Honda in London in the UK on. This was an experience for their HRV vehicle. So it allowed the team at Honda to build out this very rich story to tell their consumers around why the HRV vehicle is a great choice and a great option. They could get inside the vehicle, look around the vehicle, have quite a different experience than what you would say on a traditional website. We're currently working with Honda at the moment to release a case study on that. You can see maybe very small down the bottom there, those 2 red boxes, but one of them was to book a test drive, and they've seen a phenomenal increase in the number of test drives booked compared to the number of test drives booked through their existing website. So it's a very effective solution, not just educating the market about their product, but also actually driving real valuable business behavior as well. This is a case study of one of our customers called OFX. The reason I'd like to sort of talk about it is I think it gives you a very good example of a typical journey and engagement that XPON has with a customer. So XPON's been a customer with us for 2 years now. And like a lot of our customers, the engagement started with an assessment, an audit, and a roadmap of their marketing and customer experience technology. What that does is allows us to actually get to know the business, understand their objectives and strategic priorities, where all their data lives, what the technology stack looks like, and then build out a roadmap to help the customer get from A to B. Once that roadmap's completed, then we start to incrementally deploy the different layers of the XPON marketing and CX stack. So that's things like cloud infrastructure, ad technology. We help them ensure they own all of the data that's being generated through these advertising technology systems as well. And then once that foundational layer is in place and we've deployed those layers of the stack, then we will deploy, in this case, the Wondaris customer data platform, which has really helped OFX scale their marketing and customer experience globally in a very privacy compliant way. Obviously, being a financial services company, privacy and security is paramount. And as you can see from the quote from the customer there, we've been really able to help them future-proof their organisation and deliver on their digital growth objectives as well. That company has expanded significantly over time, and there's still plenty of opportunities for growth in that customer left. There's still different layers of the stack that we're still to deploy for that customer. So we'd expect that customer has the potential to potentially grow into $1 million a year annualized recurring revenue customer. Just to sort of give you a bit of color as well around sort of the pipeline and the health of the underlying pipeline in the business. So for the half, we landed 16 corporate and enterprise customers, many of them in that same way that I spoke through with OFX. And during the half as well, we've expanded 13 of our existing corporate and enterprise customers as well. So I think what this highlights is that, our future growth very much is underpinned, and the pipeline's underpinned as we continue to land new customers and then continue to expand them over time as well. And just to talk to some of the financial results, we've already spoken through the revenue and the gross profit and the gross margin. So I'll just jump through the expenses and the bottom line here. So our expenses were 7.3 million. On an adjusted basis, when we remove, there's almost 1.9 million in IPO-related one-off costs within that as well. So that adjusted operating expense was 5.5 million. That is a 174% increase on the previous year. However, that does include the costs of Intermetrics for the full period, for the full 6 months as well, which was not in the previous period. And it also includes a lot of fixed costs that we've invested into the business to re-platform it for future growth as well. So we would expect to see that, those operating expenses will not be, that's not typical of the growth in our operating expenses half on half. So when we look at those adjustments, the adjusted EBITDA was 1.5 million for the period. As we've raised this money from the IPO, we're very well capitalised. We're able to continue to invest very aggressively in our growth and in the future opportunities that we have. So we're quite comfortable that that doesn't reflect any issues at all with that loss that we're currently running. It's in line with our strategy. On the cash flow highlights there, probably just something to note there as well. That includes 2.3 million in cash from IPO-related costs as well. So you can see there, like I mentioned, we've almost got 12.8 million in the bank. And on the balance sheet there, we've got a very, very strong balance sheet, and we're well capitalised to continue to invest in future growth as the strategy continues. So just to sort of talk about the outlook very quickly here, there's 5 pillars that really underpin our growth strategy. The first is focusing on strengthening our existing solutions. And that may include acquisitions similar to the one we've done with Intermetrics. XPON very much is an organic growth story, but we would look to complement that organic growth with strategic acquisitions should we find any suitable. Very much focused on expanding that value for creation for customers and that land and expand strategy. We're investing very, very heavily in expanding our sales and marketing capacity with the use of funds from the IPO. Nearly 50% of those funds was directed into expanding our sales and marketing capacity and customer acquisition. We're going to continue to focus on expanding our channel relationships. So those relationships with vendors like Google and Facebook, expanding those into other regions around the globe, but also developing new channel relationships with other vendors as well. And finally, extending the platform ecosystem around our Wondaris customer data platform. And that has 2 sides to it. It's helping our customers access the data and the machine learning capabilities inside Wondaris via APIs that developers inside of our customers' business can access. And also externally, it's about integrating Wondaris into the global SaaS marketplaces to help with distribution. And that distribution through those SaaS marketplaces is also going to help us understand and capture data about where we'd look to invest geographically from a footprint perspective based on the interest and uptake we see through those SaaS platforms. So overall, we've got these macro business drivers that are really helping support strong tailwinds there. We've spoken about data security and privacy and third-party cookies. We've spoken about the journey to the cloud and how important that cloud is to drive personalized experiences for consumers. And finally there with this, change at Facebook from Meta to Meta and all this talk about the metaverse, we are seeing a very strong uptick in awareness and interest around this journey to the metaverse, particularly around our Holoscribe product. We see Holoscribe as a product that's a bridge to the metaverse. We don't think the metaverse is a thing yet. It's still a whole lot of disconnected things and ideas. We think that will change rapidly once the hardware barriers are reduced. Right now, some of the barriers to entry around that are very much related to the cost and the ergonomics of the hardware. And by hardware, I mean VR headsets. But as those barriers come down, we see that this XR space will grow very, very quickly over time. And then as far as our strategic priorities and outlooks goes, we're going to continue to invest in our marketing capability and activities to accelerate the XPON pipeline and generating new leads to land customers. We're continuing to invest in our sales teams across Australia, New Zealand and the UK to convert that pipeline into new landed customers. And that is in line with an enterprise sales cycle. We see our sales cycle can be anywhere from sort of 1 month to 12 months, depending on the use case of the customer. So, on average, it's about 3 to 6 months is an enterprise sales cycle for a customer. So as we're investing now, we expect that, the first quarter we'll start to see some activity. The second quarter, that activity will build. And by that third and fourth quarter, we should be at full ramp from the salespeople that we're investing in. We're going to continually increase the number and focus on increasing the number of products and services that our customers buy from us. We're going to keep optimizing that product and services mix and also the customer mix to continue to accelerate that gross margin. There's a lot of work and effort going into the product development and our product roadmaps, particularly around that Wondaris ecosystem that I spoke about. And finally, and probably just as important as anything else, it's really investing in our people, really helping ensure that we continue to attract great talent and retain great talent so that we can continue to scale the business and deliver on our mission. So that's all I had from a presentation perspective today. So Jane, I might hand over to you if if there's any questions.
Thanks, Matt. Okay, so with that, we'll open up the floor to Q&A. Just a reminder, if you do have a question that you'd like to ask, pop it in using the Q&A function at the bottom of your screen. We do have a few that have come through so far, so we'll kick off with this one. What were the elements that led ARR to grow by 148%? And would you expect this rate of growth to change over the next 12 months?
Yeah, so look, a lot of that ARR growth has been driven by the expansion of our existing customers. That's been really good. We have landed a lot of new customers on ARR contracts as well. We would expect that we are growing off a bigger base, but like as I highlighted, we do have a very healthy pipeline. So we do expect the ARR to continue to grow. There is some slight seasonality in that ARR as well, which is probably worth highlighting, particularly around usage fees. So maybe if I just quickly sort of talk through the components that make it up. So it's managed service subscriptions, it's software licenses and usage fees. Those usage fees are based on consumption that our customers have of the software platforms. And particularly in the platforms like the ad tech platforms, there's some seasonality around the advertising, because we earn a usage fee based on the volume of advertising that gets put through that platform. So obviously, as we exited the half with the Christmas period, a lot of retail customers, those usage fees increase. We have seen those come off a little bit, which we'd expect with the seasonality. But overall, we're quite comfortable that the pipeline's there to support the continued growth in the ARR.
Great. Okay, so a question here just on margins, Matt. So what level of gross profit margin do you expect to have over the longer term?
But we think we can be comparable with other SaaS peers. Like as we've mentioned, we're very much focused on expanding that, and the executive team's incentivized around margin expansion as well. As we get a greater contribution to our revenue mix from things like usage fees, which are 100% gross margin, and software licenses, as that continues to increase as a proportion of the mix, we think we can very comfortably be on par with other SaaS peers there.
Great. Okay. And let's talk about global footprint. So how much more do you expect your global footprint to grow over the next 12 to 24 months?
Yeah, like we're growing very quickly. We have to invest ahead of the curve as well. We would expect we'd probably see similar growth in our team compared to what we've seen in this 12 months just gone as well. Where that will be, we'll be very focused on our engineering and technical talent in Vietnam, in Hanoi. We've also got a growing back office support function there. So they're corporate roles at XPON Technology Group that help support the group in Vietnam. and they're on the ground in the key locations in the UK and Australia and New Zealand. It's very much focused on key sales and marketing capability, and also key sort of strategic and customer-facing capability. So they're roles like customer success roles that interact with our customers on a daily basis. But yeah, we'd expect that footprint to continue to expand on par with what it has in the last 12 months.
So a related question, but this time from the revenue side of things. So can you talk a little about international business as a percentage of revenue, and how do you intend to grow this business, which I would expect to be critical?
Yeah, so we're not segmenting by location, our revenue at the moment. We do see that the UK and the EU is quite nascent. We have a number of customers there, but there's a lot of opportunity there for us to grow. Like we highlighted, like the total addressable market just in these Australia, New Zealand and the UK and Australia, New Zealand and EU is vast. So we think we're going to focus on that because we've got capability, we've got good understanding of the market there before we look to other markets. So we'll be continuing to double down on the investments we've already made in the markets that we're already in for now. And like I mentioned, we'll use things like SaaS marketplaces to help us understand where the geographic footprint might be in the future, should the demand be there and should it warrant the investment.
Thank you. So a few questions here on acquisitions now. We'll kick off with this one. You've made a few acquisitions between 2019 and now. Do you have more acquisitions on the cards? And if so, what kind of businesses would you be looking for?
Yeah, look, XPON's very much an organic growth story. Those acquisitions we did were quite complementary towards that vision of building out that marketing and customer experience technology stack. So there's no acquisitions imminent right now. Acquisitions that we would look at would be acquisitions that help us complement that XPON marketing CX stack, help deliver us new corporate and enterprise customers, and help us drive gross margin accretion and profitability as well. But as I said, there's nothing imminent right now.
Thank you. And then a question on a backward-looking acquisition. So what extra information can you give me on the Internetrix acquisition? How much was paid for it? Was it cash or scrip? Did the management join XPON, and anything else that you could add to the picture would be great.
Yeah, all of that information is in our prospectus, so I encourage you to have a read of the prospectus. I can't remember the exact numbers off the top of my head, so I don't want to quote numbers. It was a mix of cash and script though, so there's very much a mix of those two things in there, but like I said, all that's in the prospectus. Yes, all the team came over, including the leadership team. And like I mentioned, we've integrated them into the business. That Internetrix business is now part of XPON Technologies, as is our previous Datacent business. So we merged those two together. And yeah, the team's executing very well, and there seems to be some fantastic synergies there.
Great. So how many of the 16 landed customers in the first half came with Google as a lead?
I don't know that number off the top of my head, so I don't want to make it up, sorry. But historically, it's been about 30% in Australia have come from Google, but I can't guarantee that's the exact number on this one because I don't know it off the top of my head, sorry. Okay,
great. Thanks, Matt. Okay, so question here. When do you hope to be cash flow positive?
Yeah, look, we're investing very heavily in our growth. If we wanted to be cash flow positive right now, we could be, but we think the opportunity is so immense that we've taken the decision to really aggressively invest in growth right now. We see that will be the case for at least this next coming financial year, so FY23. And should that start to change, then in FY24, we'll have to see. But for now, we're very much investing in growth.
Great, thank you. So another question here just on revenue per customer and geography. I think we've already said we're not breaking down into jurisdictions, but the other part to that question was, can you please tell me what percentage of revenue you receive from the top 10 customers, top 5 and top 1?
I don't know the number off the top of my head, I'm sorry. But we do have a good spread of customers. Like the way that our customer base is structured is we have corporate enterprise customers. We then have what we call medium customers, which are customers that are still big corporate and enterprise customers, but have the ability to expand more into the top tier. And then through that Intermetrics acquisition, we actually picked up a number of smaller customers as well, which is a bit of a long tail that we have. So we're sort of very much focused on corporate enterprise, and that's the only customer we're focused on attracting right now. And that's sort of how we sort of look at the cohort of our customers, but I don't know the numbers off the top of my head as far as revenue contribution goes, sorry.
Okay, and then perhaps a related question, and we're getting pretty close to time, so we might have time for maybe one or two after this. So just a reminder, if you do want to ask a question, drop it into the Q&A function. So how do annual contract values of new landed customers compare to existing customers?
How do annual contracted values of new landed customers, existing customers? So is the question in the context of if we were to land an existing customer now, would that contract been comparable to the size of the customers that we're landing now? Is that the context of the question?
I think so.
Yeah, look, they're definitely comparable. Like when we land a customer, we'll either land them with one of the layers of the XPON stack. So that might be ad tech or MarTech or cloud. And some customers come straight on to recurring revenue contracts in that manner. And then as part of the work that we do with those customers, we'll then go and do that audit and blueprint assessment to help them build out that roadmap for their ecosystem. Other customers will land them as a one-off project. So we'll do the audit and assessment, and then over time we'll incrementally deploy the different components of the stack. But like for like, we're seeing that those corporate enterprise customers, which is what we're focused on, we're definitely seeing that the size of the landing deals is consistent with what it has been in the past. The focus for us is how much we can accelerate the expansion of customers and increase the revenue per customer.
Thanks, Matt. Okay, can you talk to who you see as being sort of key competitors or peers for XPON?
Yeah, so I think on a competitor basis, we feel that our XPON marketing and CX stack does create a very unique selling proposition for us. We haven't been able to yet find another organisation that can go to market with that same full stack solution and capability. However, having said that, those different components of the stack, there's definitely different competitors in different areas of that stack. Particularly in that MarTech and ad tech space, we see global competitors like Media Monks, which is owned by S4 Capital. Jellyfish is another European company that's in Australia as well in that space. And then in the cloud and infrastructure side, there's a whole lot of usual suspects that are sort of competing in that space. And then with our Wondaris customer data platform, there's some global competitors. There's Segment, there's Telium are two of the global competitors. We feel our product's very well differentiated against those offerings, both from a usability and a price perspective. Wondaris allows our customers to get in, and we meet our customers where they are, so they don't need to spend a lot of money to get onto the platform. They can get on quickly and then grow and expand over time, which is a key point of differentiation that we find with the Wondaris platform as well. And from a peers perspective, there's a lot of other small cap ASX companies there. I think I'll leave it to the market to determine who they think our peers are.
Great. Okay. Well, with that, we might wrap up our session today. I want to thank everybody for making time to attend. And Matt, I might hand back to you now for any final closing comments.
Yeah, no, thank you, Jane, and thank you everyone for your time in joining us this morning. Like I've sort of said through the presentation, like XPON very much is a fast-growing, annualized recurring revenue business. It's very sustainable, our growth. We retain our customers, we grow them over time, and we're very much focused on growing that margin and expanding it over time. So we think we're in a good position for continued growth. So thanks for your time, everybody.
Excellent. Thank you, Matt. We look forward to keeping you up to date with XPON's progress and invite you all now to disconnect.